Redefine's chairman Marc Wainer is with us in studio. We've seen the property index on the JSE hit another new record, Mark. Time to get worried, or do you think you can still go full out?
Alec, I get a little worried. I think these prices, to me, are crazy. But then again, you have to look at the long bond yields. If you look at the 10-year government bond this morning, it's 30 basis points down since Monday. So if bond yields are down, that's good for property stocks. I think that's on the back of lower oil prices and the anticipation possibly of a rate cut. But I think we're in territory where there's not really value in my view.
When last was it like this? When last was it as difficult to find a good property to purchase?
Probably 2006-07, around there.
And at that point, what happened?
Well, then we had the global financial crisis thereafter, and that knocked the wind out of us for a bit. But it's we're in a funny space because obviously good unit prices allows you to raise capital below the cost of acquisitions, and a lot of people just do that. They say, well, I can buy this and my stock is cheaper, or even borrowing costs are cheaper offshore. But at the end of the day, fundamentals come home to roost sooner or later. So you can't just buy things because you can afford them and it's earnings enhancing. Are the fundamentals right? And that's the hard part.
And how closely correlated is the property sector with what happens in the South African economy, or is it more an interest rate story?
It's an interest rate story, largely. And that's one of the problems, because you see prices going up. On the ground, fundamentals are not great. It's hard to let space, particularly office space. The consumer's under pressure in retail. I'm waiting to get the December trading figures, which seem to be pretty reasonable for most of the retailers, particularly the cash retailers.
So what if you own a lot of property stocks?
You keep holding them. I think property stocks, we've always said, are there for long-term growth. So if you're going to panic, I think there could be a correction in the next couple of months. I don't think it'll be severe. But then it comes back, because as long as you've got growing income, if you're growing your income at 7 or 8% per annum, give or take small changes in interest rates over a 5-year period, you're going to be doing fine. It's not a share you're going to buy or an investment. You're going to buy 10 Rand and in 5 years' time it's going to be 20, but it's going to give you a 7-8% return, growing at 7 or 8% a year plus capital appreciation.
It's Marc Wainer. He's the chairman of Redefine.